Good morning, everybody. Welcome to today's midweek update. Man, we are in the middle of the Chop Fest. We spoke about it a little bit yesterday. We're still in the midst of it today, and let's just dive right into the charts. Let's get things started here. Here are the major indexes. We've got the S&P 500 right here. We've got the Nasdaq. We've got the Russell 2000, the New York Stock Exchange, the Dow, and down here we have the IBD 50. I like to keep the IBD 50 on the radar simply because many of the stocks that I like to trade tend to show up within the IBD 50. So I did a poll over on X, over on Twitter. Yeah, X. And I'm still getting used to calling it that. Um, of if they thought that this move that we're going to see today, if it would get faded or if it would power through. Right now, it stands at 62.5% of people think that it's going to get faded, and we've got 37.5% of people saying that it's going to power through. Where do you think that price goes from here? Do you think that we break out, or do you think that we get faded and retest the lows? Go ahead, type into the chat. Let me know your opinion. Let me know where you're at. I have my opinions, but I'm curious what you guys are thinking about this current market. Do we get faded, or do we power through resistance here? Here's a couple of thoughts about this. So, right now, the market is caught between support and resistance, right? So, it found support right at the recent lows. If you zoom out on the S&P 500, and I'll do my best to keep my cursor right around here. You can see that price is right around a prior resistance level. If you go to the left of this chart over here, you're right around the April high. And that's where price found support, and it rallied for a couple of days now. Now, you take a look at the S&P, and it's right around prior resistance from May. So it's caught between these levels, but it's not just support and resistance at price structure. It's also support and resistance around key moving averages. Right now, the S&P 500, and let's make this a little bit bigger. You have support somewhat near the 200-day moving average. You have resistance somewhat around the 100 or the 5 EMA. We'll see how that shakes out. But it's not just one index, right? If it were just one index, then you know it I don't think that we would have a robust market, or really a whole lot of an edge. What I think that helps us, or at least this helps me with my edge, is seeing how each of the markets are shaping up. So we come over to the Nasdaq, right? The Nasdaq might even be a better example, because the Nasdaq hit the 200-day moving average. It's rallied, and now it's right around the 5 EMA, and you also have that orange line there, the 100 EMA, just above it. So it's sandwiched between these levels, and what happens, right? You got a ping pong match that's potentially happening here. So is price going to get faded, or is price going to power through? The question still remains. So let's go a little bit deeper to try to figure out how this is most likely to shake out, and, well, really, what sort of response should we have, right? So we're still building the bigger picture here. Each of these indexes are really caught between support and resistance. The Russell trading just underneath the 50-day moving average, just above the 200-day moving average. You take a look at the weekly time frames, and let's get these annotations out of there. And they're roughly the same, right? The price pulled back to the 40-week line on the S&P 500. It rallied, and now you have these prior areas on the chart that are right in its face. Same thing over here on the Nasdaq. Similar on the Russell. The Russell is actually caught between the 40-week line and the 10-week line. And these are looking very similar to the daily time frames. You come over to the weekly, the monthly charts, and the monthly charts are starting to move sideways. So we're in this longer consolidation area, and so part of the question to figure out, well, are we going to power through, or are we likely to get some more chop? The way that I look to figure this answer out are, what are the stocks doing? What are the stocks doing? Are the stocks that I'm interested in, are they setting up or are they not? For the most part, they're not. For the most part, there's been a lot of volatility and not a whole lot of setups. There's a couple of setups that were coming into this week. GoDaddy has been the top performer. It broke out, followed through. Attempted to break out on Friday, pulled back on Monday, started to follow through yesterday, and is following through some more today, and so far is up close to 6%. But aside from that, there's not a whole lot else here that is that's making any sort of moves yet. PSN is still consolidating. PODD still consolidating. MUSA is still consolidating. SRPT is still consolidating. And I wouldn't consider any of these to be fantastic setups. SRPT, I think, is interesting as it's coming into earnings right now. This thing, how much has this declined? This has declined about 20%. So I think that we could get a move after earnings, and earnings comes out later tonight. I think that it could get a quick move out of here, but even though it hasn't declined all that much, it's only declined about 20%. You still have a big resistance zone right in its face. That's only about 4% above where price is at right now, above this low pivot area. And then you have this anchored VWAP from the start of the base. There's a lot of there's potentially a lot of supply on this one. And if we're in a market where there's lots of chop, then I wouldn't be so tempted to go after this. If we're in a market environment where everything's working and you're starting to see nice big bases form, and those nice big bases are starting to work, and prices are breaking out and following through, then would I attempt something like this? Maybe. But in this kind of market where you have not just the indexes they just look like a giant mess, but you also have very few stocks that are setting up and doing anything. I think that caution is caution is the answer that I'm taking, and I'm mostly in cash. Right now, I've got VIRT on this hasn't really done a whole lot. It broke out. When did it break out? It broke out on Monday, and so far it hasn't gone anywhere. One of the things that I just tweeted about is personal performance and understanding your numbers and understanding your recent trades. You need to know how your recent trades are performing, because if the market moves in waves, the market moves in cycles. So if your recent trades, if they're doing well, that's giving you great feedback about the market. If your current trades are going nowhere, that's also giving you great feedback about the market. here's my last several trades, right? So I'll tell you where I got in and where I got out on each one of these. So VIRT, this is the only trade that I've got on right now. I've got a very small position in it. I got in at 27.71 on Monday, and then yeah, it's moved nowhere. Well, where's price? 27.72. I'm up a penny. All right. Start stacking those coins, baby. All right. Then here was another one that this one was a winner. BTSG, but this was a very small winner, right? So this was one that I bought a couple of weeks ago. I bought this breakout here. Volume was decent on the breakout, and then it inched its way higher. And then I ended up selling the whole thing where it's marked right there for a 4% profit. And then uh, I ended up avoiding that sharp drop. And why sell there? The whole the whole reason why I decided to sell on that day had to do with this thing that I call danger signals. Now you might be saying, what are danger signals? Danger signals are signals that tell me that momentum is coming out of the trade and that the weight of evidence is starting to tip the boat in the opposite direction. I don't want to be in a capsized boat. So if I see too many danger signals flashing on my screen, then I'm going to say, all right, enough's enough and call it a day. So that's what I did well with this one. Mark, I see your question. Let me get through two more ideas and then I'll answer your question. But for everybody, get your questions in. Well, we're gonna have a good amount of time here for Q&A. So here's the next one that I was in, right? So far, well, what do we got? We've got VIRT that's made me a penny, right? A penny saved is a penny earned. Then we've got BTSG. That one's up 4%. Then we had Arista Networks, and we had this other one here, NetApp, which we'll talk about. But this one I ended up losing 1.5% on. Right. So this one, just to reset the chart, this one had a pretty strong break above the 50-day moving average after reporting earnings. And so I thought that I would buy this one on the follow through. Initially, had my stop down at the 50-day moving average, but what I saw happening intraday on this one, and I very rarely exit trades just in the middle of the day, but well, what I saw happening on that Tuesday was enough to prompt me to exit the trade. I saw many danger signals flashing, more than I typically see. Plus, seeing stocks on my watch list deteriorate, plus seeing the market start to deteriorate. Well, when the whole thing is flashing in this kind of a way, it's a sign for me to reel things in, especially on trades where I just put this thing on, right? If this were a trade that maybe I've been holding it for a while and it does something like this, then maybe I give it the benefit of the doubt. If most of the trades are holding up, then maybe I give it a little bit more room. But everything getting smashed, decided to exit this early and exited with a 1.5% loss, 1.4. Well, whatever. Then there was this one here, NetApp. Same story. This one, and let's turn off the annotation so you could see this one too. Attempted to follow through on its move back above the 50-day moving average. Then it too reversed. And on this one here, I decided to roll my stop up very quickly and ended up taking just under a 1.5% loss, just over a 1% loss, I'll say. So if I take a look at my recent performance, right, and I'm using my recent performance as a gauge for how aggressive I should be, how light I should be, it's telling me that it's time to be conservative, that it's time to reel the reins in to be that continue to be selective, right? I'm always very selective with all of my trades, but as far as the position sizing goes, as far as how much I'm going to step on the gas, it's telling me this is not the time to be stepping on the gas, right? That this is the time to be playing conservative. This is the time to be taking for any trade that I do take to be trading a much smaller position because right now things haven't gotten moving yet. Well, when the market improves and the market always goes through these ebbs and flows, sometimes things are working extremely well, sometimes they're not. When things are working extremely well, that's when you start to push the gas. When things are not working well, this is the time to ease up dramatically. And uh, this is what's kept me alive in the market for so many years, right? Like I was starting to think like, oh, like keep me alive. There's, God uh, and health are keeping me alive, but and keeping myself alive as far as trading goes, it's really um, doing exactly well what I just mentioned, which is trading much smaller when things aren't working and stepping on the gas when things are working. So let's take some questions. I see a question that came in from Mark. Mark says, quick question: VERX beat earnings. Let's take a look at VERX. Put that one up here. VERX. So VERX beat earnings. Okay. But price doesn't seem to be following through. Yeah, no, it much like everything else, it's a sloppy mess. Um, is that just because the recent market pressures? I ask because there are a lot of times price doesn't seem to reflect. So here's my general thoughts on price action and how price reacts to the market and price reacts to news events, earnings announcements, and what have you. There's the event, and then there's how price actually responds. So I try to interpret the data as little as possible, right? So if there's a news event, if there's some sort of FOMC meeting notes that come out, if Powell says something, if uh, unemployment is a certain number, I try to factor as little of that into my trading as possible because sometimes the market reacts extremely well. Sometimes the market doesn't. Sometimes the market might think that, oh, we numbers are terrible, but they thought that they were going to be even worse, and then the market takes off. Or sometimes the opposite happens, and you might have earnings that are absolutely fantastic, but they're not as good. Sometimes maybe it is the market that's weighing on it. It could be so many different things. But the question that I ask myself is, well, how is price setting up right now? And is this something that I want to be trading? So let's go back in time and see when was the last time that this was tradable. I think that this would have been tradable a couple of different times. Um, I had that cup of handle started to be drawn out back here. So there's that one. But let's draw out a few others here, right? So you had this, that was tradable. Then price runs up, a little bit choppy in here. I think that this was tradable. Let's call that a pivot. And you might even, you might see this area in here, Mark. I might have seen this as a flat base. I need to see exactly how long that is to say, is that a flat base? But you do have some VCP action in there, right? So volatility contraction pattern action where you have this section over here, right? So that's between June 14th and roughly June 28th. So about 2 weeks where prices consolidating there. Then it consolidates again for another couple of weeks, and then you get the breakout. So that was tradable right in there. And if you took that, and the way that I like to trade is I'll buy the breakout, and I like to have my stop at a place just below uh, a technical support area on the chart. So that would give us roughly 34. Yeah, I'd probably have my stop at 34.90 or maybe 34.95. I like to keep it below the whole number. So you'd be risking about 4% on this, and price ran about 10%. That's pretty good. And that's pretty good. So I would have been buying back here. And then if price is doing this ahead of earnings, I'm probably not holding through earnings. Right. So if this were me, I'm probably selling. I'm certainly selling some up here because I have multiples of my risk. I might have taken something out at 6%. I'm probably taking something out up here closer to 10%, just because I've made about twice my risk on that one. And then maybe I'm trying to hold the rest. I'm probably raising my stop along the way. And let's see, well, where's the yeah, there's a hard stop. So as I'm making money on this, right? So if I sold some right here, I'm probably getting my stop to break even at that point. Then after that, I'm at this point right here, I'm probably raising my stop to just below that recent low. Then the price comes back, retests, it goes higher, and I'm slowly raising my stop, trailing it with the 21 EMA. If I'm not out on this day, I'm certainly out right here. So I don't really wait for earnings to bail me out of a position, right? I'm not sure if that's part of the thinking here, but I don't wait for earnings to bail me out. If I'm going to hold through earnings, I want the price action to look great. Heading into this earnings report, earnings did not look. The price action did not look great to me. So I would have, if I were in this, I would have been out on Friday the 2nd. All right, cool. I'm glad that answers your question, Mark. Let's see. Here's a question from Keep It Simple. Can you have a dedicated stream or video on your new book as just on a topic of business plan for trading in general? I don't know if you already did one stream on it. Yeah, well, we could do that. We could do that. Let me jot that note down. Business plan stream. We'll probably want to do more than one. We'll probably want to do more than one because writing. So, I just wrote a new book for everybody that doesn't know. I just wrote a brand new book, and let me go grab the page for that new book. But it's called the Trading Success Blueprint. The Trading Success Blueprint, and what this book does, it teaches you how to write a business plan for your trading. Now, writing a business plan for your trading is very important. And there, I just put the link to the book in the chat. Writing a business plan for your trading is paramount. The reason why is because this is going to be your guide for how you're going to operate in the market. And you might be saying, well, Mike, I already have a trading plan. Isn't that good enough? A trading plan is a start, but a trading plan and a business plan are two separate things. A trading plan is how you're going to trade this stock. right? And I basically told you what my trading plan would have been. I would have entered here, sold some into strength. We didn't get into position sizing, but that's part of the trading plan as well. And then where are you going to exit? That's your trading plan. A business plan is going to take a lot more into account. You need to be clear, crystal clear on what your core trading philosophies are. Well, what is it that you're going to trade? What are you going to assess? Well, how are you going to do your market research? How are you going to know if it's a strong market or a weak market? What types of setups are you going to trade? And setups are a lot more than just chart patterns, right? You might be somebody that doesn't even look at charts, but the setup is the thing that prompts you to take an action. Well, so what's going to prompt you to take an action? How do you know what's a good one versus a not so good one? All that goes into your business plan. How often are you going to review, right? Well, how are you going to take notes? Well, how often are you going to review your notes? What stats are you going to track? All these things are important, and that's why I just wrote this new book called the Trading Success Blueprint, because you need something that's simple, that's going to walk you through how to write a trading business plan. So many of us have these ideas that are swimming around in our heads while we tune into YouTube and live streams. And I appreciate you guys being here. So many of us read lots and lots of books, but we don't take the time to formally write out, okay, here's how I'm going to operate, and thinking through all the different steps. So I wanted to create something that gives you the outline of, okay, here's what a trading business plan is. Here are the different things that you need to be a part of it. Here's a template. Here's my trading business plan that I've filled out for myself. So you could have my example along with it. So you could take some time, and with the way that the market is right now, it's the perfect time to be filling out your trading business plan, because there's not when the market's like this and it's just a chop fest. This is the time to be able to take a step back and say, all right, I'm going to write my plan. And then when the market turns around, and it will, then you'll be absolutely ready and know exactly what to do. um Here's a question, another question from Keep It Simple. So, how is this different than the Trading Mind Wheel book? Excellent question. So, the Trading Mind Wheel book focuses on the skills. The Trading Mind Wheel book focuses on the skills that you need. So, uh, think of it like, uh, if you want to build a business, the first thing that you need to do is acquire skills. If you wanted to go, I don't know, open up, say, an ice cream shop, right? Like, something real simple. You should know something about the ice cream business before you go and open up an ice cream store, right? And you might think, well, I know my favorite flavor of ice cream. I know how to make a sundae. You probably need to know a little bit more than that. You probably need to know something about the neighborhood. You might need to know something about acquiring real estate, whether you're going to buy it, whether you're going to rent it. You need to know something about the types of equipment, something about managing people, right? So there's the skills of running the business, and then what you need is, well, once you have all that set, you need to actually write these things out rather than just go and start opening up your ice cream shop. Because let's say you wanted to take out a business loan, right? And you go to the bank, and you're like, yeah, I've got this really great idea. I want to open up this ice cream shop. I want to open it up over on Park Boulevard, and it's going to be really great. And you talk through it, and they're like, all right, great. So give us your plan, give us your document, your business plan, and we'll run it up, show the management, and we'll talk about getting you a loan. And you're like, oh, well, I don't have any of that, but I know what I'm doing. Then they'd say, all right, that's wonderful that you know what you're doing, but please come back to us, well, with your business plan written out, and well, we'll talk. The same kind of thing applies to your trading, and you'd be so much better off if you formalize the process with your trading, so that way you know exactly what to do. So the trading mind wheel gives you the tools to learn all the different skill sets that you need for trading. And now the trading success blueprint is going to teach you how to formalize the process of writing your business plan. That's a difference there. Let's see, what other questions do we have? I have a couple of stocks that people wrote in that I want to go through. Let's see here. Neo, or Grant, I should say, wanted me to look at Neo. So here's Neo, NIO. So this one is in a steady downtrend. Looks like I wouldn't be looking to buy this one. So here's a couple of things with this. So we could talk about the chart, and then I'll talk about the types of stocks that I like to buy and why. So right now, this one, I would say that this one is in a stage 4 downtrend. The reason why it's in a stage 4 downtrend, you notice how both the 40-week line and the 10-week line are both curved down, and how prices underneath both of those levels. That's what's putting this into a stage 4 decline. Once these start to level off and you have price moving sideways, then you're finally switching back into stage 1. And stage 1, we could go into this is a whole nother presentation, but stage 1 is where price is basing, and price could be basing for a very long time. The time that we want to buy is when price is in an uptrend, or starting to turn into an uptrend. This isn't it. This stock would never pass my screens. The reason why is because it's trading under $5 a share. My absolute minimum price for my screens is $5 a share. Once it climbs above that, then there's a litany of other things I'm looking for. I'm looking for earnings. I'm looking for sales. I'm looking for growth. I'm looking for there to be some sort of element of this stock being, well, one of the big monster stocks that are out there. And one of the first steps to getting there, it has to be trading at least 5. Most of the stocks that I trade, you can see right here, right? Just on this brief list over here, most of the stocks are trading over $100. There's a couple of them that are trading in the $11, $20 range, but you have most of them that are trading at $100 or more. Here's one from Harry. Harry wanted to talk about NVIDIA. Now, NVIDIA is one that I trade. It's one that I've traded a few times. And we actually spoke about NVIDIA yesterday. So NVIDIA had a very sharp drop on Monday. And that sharp drop was an opportunity to buy, but it's like an expert buy. It's not one that I would recommend for most people to attempt, because most people will see it and they're like, oh man, that worked out great. That you're up, you've been up 17.5% on that one. I'm going to go and buy those dips. Well, most of the time you're going to end up buying this one or that one, or maybe this one over here. So you really need to know what it is that you're looking for in order to do that kind of a maneuver. For right now, NVIDIA is in the middle of the chop zone, right? So the low risk spot was on Monday, fairly close to the open. Then after that, now you're dealing with a whole bunch of overhead supply. Let's turn off these annotations. And you see all the overhead supply, like right over here, right? Yesterday, it's got the 100 EMA, that orange line. Then you have those other moving averages. That's a 5 EMA. Then you have the 10 EMA. Right now, today, Nvidia hit the 10 EMA, it reversed, it got faded. So now you're dealing with some buyers meeting sellers and they're clashing. There's all the supply, there's all this demand, and they're clashing. So this is the middle of the chop test. This is where personally I don't want to be right there. Right? If I'm in from down here, I'm selling into strength, and maybe I'm waiting with a piece of this. But as far as starting a brand new position, no way, not there. Um, so here, wanted to talk about gold. Let's take a quick look at gold. And I see a couple of other questions from Keep It Simple over on YouTube. We'll get to those in a minute. Gold. So gold is consolidating right now. Gold is consolidating. Let's draw a straight line from back here. Oh, and it looks like I was looking at this a little while ago. All right, so that head and shoulders did not play out. But that's the thing with gold. Gold tends to not really have huge moves. Like I know that it had a really strong move back here in March, but for the most part, gold has just been slopping and chopping around. Yeah, let's draw that line right there. And so I don't really see much of a tradable pattern yet. I just see this as trading sideways, roughly between 225, 226, and it's attempting to make a new floor somewhere around the 217-ish area, it looks like. So if this could continue to tighten up, maybe this is forming a VCP. Maybe it's forming a VCP where you have this consolidation and then maybe this turns into something. Maybe you get something else over here. Well, we're still in the realm of maybes with this one. Something that makes this a bit of a flawed pattern right here is all this volume. If this were going to be a constructive VCP, you shouldn't have volume like this at this juncture. The problem with this volume is that this is some of the heaviest volume that we've seen throughout this entire move. So that's showing us that, yeah, there's a lot of supply that's coming to market right now. Yeah, I wouldn't be looking to trade gold. Let's see what other questions came in. Let's see. Keep It Simple says 100% true. Trading is a real business, not some side thing or hobby, and it should be viewed and approaches as such. Yeah, absolutely, absolutely. That's why I wrote the Trading Success Blueprint. So again, I have the link there. If you guys want to go check that out. Now, I'll make a note to myself to put a link to Trading Success Blueprint out there on social media later today. All right. What are my thoughts on Deep View? I've been testing Deep View for about a month and a half, maybe coming on 2 months now. I think that it's a fantastic platform. I think that it's it's arguably best of breed right now as far as screeners go. Well, with the trajectory that these guys are on, I think that it'll be they're going to pull ahead very, very soon. They're very innovative. They're quick. They're nimble. There's some elements. If I'm doing a comparison between them and Market Surge, and maybe we'll do this comparison. Maybe we'll have a stream or video where I'm comparing Deep View versus Market Surge, because I used Market Surge for about 15 years. Started way back when it was still called Market Smith, and Market Smith for a very long time, fantastic tool. It still is a very good tool. there's a handful of fundamental data that Market Search has that Deep View doesn't have, or they don't have yet, or they don't display it in quite the same way. So that had me thinking, should I be sticking with Market Surge and just use these fundamental data that I've been using for so many years, or uh, are these pieces of fundamental data not quite as important as what I thought? Well, the conclusion that I came to was that I don't want to be married to certain fundamental data. Like the core things are all there. The earnings are there, sales there. You can still see quarterly earnings, quarterly sales, annual earnings, annual sales, projections. All those kinds of things are all in Deep View. But the way that you could screen in Deep View, the loading times for Deep View, I'm finding that my process is getting a lot more efficient because the platform just moves quicker. The way that you're able to sort the screens in your watch list, that's a lot more efficient. And they also have these dashboards that are very cool. You could see heat maps. You could see that there's this new thing that I'm playing around with called a bubble map. I'm liking Deep View quite a bit. All right. Any other questions? Any other questions? I saw a comment come in from Twitch, but I think that it's just it doesn't make any sense. I'm not gonna post it. But any other thoughts or comments or questions before we call it a wrap? We're a little bit over, but that's okay. I'll give you guys a second to get stuff in here. Uh, Keep it simple. So you're already a Deep View user. All right, cool. So yeah, we'll at some point I will do a video on Deep View. Absolutely. All right, and if it looks like that's about the end of things here. Probably should have put this little ticker thing on earlier. Make sure that you like and subscribe. That's very important. So that way you get notified whenever we go live and do these kinds of events. If you're not already on our newsletter, that's probably the best way for us to keep in contact because all these platforms, their algorithms are changing constantly. Email is the one thing that gets me to your inbox consistently. So if you're not already on our newsletter, join our newsletter at marrowwealth.com/newsletter. And that is about it. It looks like, let me see. All right, cool. That's it. So thank you all so much for joining me today. It's always a pleasure. And I will see you back here again on Friday for the Traders Mind Chat show. Take care, everybody. Much love and God bless.